And we are live.
Yes,
I'm feeling it today.
I can tell. Meanwhile, I need to get this shirt together. Okay.
Yo, what's good, everybody? How's everybody doing? Reggie was the first person here. So,
Okay, Reggie.
shout out to you, Reggie.
I always have to like pause and like share everything, so it takes me a little minute.
I'm here for it. Like, I guess I should do a better job of that. Like, let me just quickly run to my Facebook account.
Right.
This should be interesting.
I'm
Be
excited.
like, hey, join us. Y'all, if you guys see us joining or like posting, we hope that you do the same thing. Go ahead and post it to your social media. Go ahead and share the word.
Yeah, the good word, aka the gospel.
I don't know about all that, but it is the good news though. So I guess it could be. So, but we felt like, it was necessary for everybody to, come back into full circle and full swing of things. So welcome. If you are new to the Come Up series, which, we totally think you are awesome and we appreciate your existence, go ahead and hit the subscribe button somewhere here down below. And go ahead and hit that subscribe button. And of course, you can hit the bell so that way you can be a part of the notification squad, aka the Cool Kids Club. Wow, we're just doing all types of outtakes today. I'm excited. That's how you know something is coming. And then on top of that, if you like what you're seeing, go ahead and hit the like button. If you don't, go ahead and hit the dislike button. We can always get better. Just make sure you tell us what is it that we need to get better at. We do listen, so go ahead and hit that. All right, Jolene.
Yes.
Without further ado, should we get some of the housekeeping out of the way?
Yeah, I always have a few things to say.
Okay.
Like I was still sending out, stuff.
Oh, you're still doing your thing. Okay, so you know what?
I got it. I'm ready. All right, you ready for me?
Always ready.
All right, here we go. So y'all, hey, it's Jolene seeing the place to be, and this is Trade Talk Tuesday. Shout out to Super Chats. As you know, the Super Chats go to 7 organizations: Life Enrichment Group, Greenwood Project, The Bridge Echo Village, People's School for Positive Education, Black Mental Health Alliance, Operation Reach Back, and Live to See Cancer Cured. All of these organizations are the beneficiary of your Super Chat dollars. In addition, the Come Up likes to throw some special sauce in there and put it in a burner account to maximize the Super Chat dollars for our organizations, all through our initiative called Come Up Community. Just so you know, these are the 7 for right now, but there will be an announcement later when we're taking on new nonprofits, but that won't be until next year. So if you sent me something about an organization that you believe is doing some good work, you're gonna have to resend it again, because I guarantee you it is lost. It is lost in the sea of DMs. But let's get into this market right quick. Okay, so first of all, it was green.
Yes.
It was green. I hope y'all saw green in your portfolios today. It was super green. The Dow was up 185.28 points. S&P 500 was up 40.82 points, and the NASDAQ was up 156.37 points. So those are our 3 indexes that we look at. Next, we look at sector performance, and out of the sectors, there are 11 different sectors. So we track the top 3 and then the bottom 3. So the top 3: communication services, financials, tech, and the bottom 3: utilities, energy, and industrials. Okay, so now, we like to track our own performance here. So there are 31 picks, and you can find those 31 picks and 31 sips. No, I'm just kidding. We just call them 31 sips. 31 picks. You can find those on our Instagram at that come up series. They're all posted there. And so I told y'all last week that I would start tracking the new ones. And let me just say, there were quite a nice amount of 52-week highs. So
I'll be having it.
yes. Okay. So for top three, we have X, which is Steel, with a 2-week high. Then we have WWE, World Wrestling Entertainment, y'all. And then Taiwan Semiconductor with another 52-week high. Then for our bottom feeders, we have Datadog, Square, and Neo. So these are the new, we're tracking the new ones here. But we also had a couple of other 52-week highs. We had SMH, y'all. SMH is really doing it.
Yo, I'm gonna just keep my comments in witness protection.
Yes, just keep your comments to yourself. If you don't know, SMH is my stock babe. We had to break up because I had to get with my stock crush, aka Tesla. And there's no complaints over here. There's no complaints. However, you know, I see SMH, you know, I low key want to send a little text like, hey, big head, but it's all good. ARKK.
Oh wait, I gotta be careful because I don't want to be, you know, licensing reasons.
Okay. All right, right. Y'all didn't see that post. We won't even say it's on his Instagram. You have to take a look at it. And Lamb Research. So that was quite a few. Wait, so 1, 2, 3, 4, 5 52-week highs. Yeah, I have some other announcements, but I'll save those to the end. So, Mark.
Are we ready?
Yes.
All right. Well, ladies and gentlemen, I'd like to welcome you to the Come Up Series School of Investing. And today we are hosting our first annual, or our first ever inaugural, I should say. Look at that. I'm already getting my words like crunch because I'm so excited. Anyway, so pretty much today is our first day of registration. Now we're a little late. I mean, because of the fact that we had this little holiday thing going on. And don't worry, you know, tuition and everything is still free. So we are good. And we just felt like it was time because we felt like some folks were jumping into a bunch of classes that didn't really fit their curriculum. And so we felt that it was necessary to at least give you an orientation as it pertains to getting started. So without further ado, I'm going to turn you over to the Dean of the Come Up Series School of Investing. Hi, y'all. I'm just kidding. I wish I had like the little music playing in the background, like the little cheesy like college like marketing music in the background. Yeah, we're not going to do that.
It would have made me laugh.
It would have definitely made me laugh too. All right, so welcome y'all. This is orientation. Class is now officially in session. So what we will do is we will host more sessions like these, especially on the Come Up Series. You've asked for it. We took the time and said, you know what? We want to do something in which that not only are our current cousins able to not only just take in and probably come back a little bit and just, you know, take a breather. And then also, if you're looking to mentor anybody, then you now have a blueprint rubric. So that way you can bring people along. And there's probably going to be things in which that you probably may have missed in the process. And we're going to go a little bit further as it pertains to a deep dive in some of the things just to get certain people started. So if you're new, today is your lucky day. If you've been around for a while and if you're an OG, nothing wrong with that, because at the end of the day, you can still learn something. And like we always say, there's still always a gym within a gym.
There is. And also, if you do not have some type of note-taking material, you're playing yourself, because this is the perfect opportunity to, one, check and see if your OG cousin, check and see, like, you know, do I know all this stuff? So it's like a little reflection period, review for you. And then the new cousins, we are taking it back. So, you know, we always come back. No cousin left behind.
All right. So we are now in session. Welcome. So we wanted to just let you know our mission statement here at the Come Up Series, School of Investing. And it's literally something simple. The game needed change, so we decided to let the culture be the cashier, aka you.
Ka-ching.
Yeah, so instead of us playing cashier, which honestly we don't need it, we felt like it was necessarily for you because it's essentially, like we say, the more you earn or the more you learn, the more you earn. Oh my gosh, I'm like so excited about today. Like, yo, orientations get me so psyched. So, yo, let's bring it down to a few clicks. Yo, Jolene, I'm gonna put my excitement in correction real quick.
Okay, yeah. What, 10%? I think
10%, 10%. We're not going into bear market. We're not gonna do that.
just 10%.
Just 10%. Okay, so Jolene, did you have any notes for the folks?
Yes. Oh my gosh. Based on your strong record and your exemplary character, just want to say congratulations. You all have been granted a full ride scholarship to the Come Up Series School of Investing.
Dope. Oh, and this is lifetime, by the way, right? I mean,
yes.
Okay, so lifetime.
Yep.
Scholarship. All right, so let's start with the basics. So today we're going to be taking you through a few things through this orientation. The goal is we hope that you take advantage of the tools available. So we're going to go through the basics. We're going to go through your strategic plan. We're also going to show you how the board is set up. We're going to let you know some of the challenges. And then on top of that, we're going to focus you on setting goals so that way you can better execute. We're going to do all of that today.
All of it. Get ready.
Okay, so let's understand the market. Understanding the market is essential. So if you don't understand the market and if you're just jumping in, then you're really doing yourself a huge disservice. So the first thing that we thought, we picked 6 items in which that we felt would have given you something in which that honestly, it can start you on a beautiful path. So let's break some of these down, shall we? Now, many of you, when you start thinking about like fundamental things, you start thinking about like, for example, earnings per share. So what we say is it's the total company profit divided by the number of stock shares outstanding. So if you ever go to, say, for example, looking at a 10Q or any other financial statement by a company, you take the total profit that they brought in, and then if you divide that by the shares outstanding, which you can find on any brokerage or any platform like even CNBC, if you pull up any stock ticker, it'll show you how many shares they have outstanding. And then you take that and you divide that, and then essentially there you go. There's the actual earnings per share. So it's pretty cool. Then let's talk about market cap. Now, AKA market capitalization, or if you're in the private side market, it's pretty much called valuation. So it's pretty much the amount of money you would have to put up if you bought every single share of stock in a company. So if we think about it, somebody just recently got bought out for $27.7 billion. So that kind of lets you know that their market cap was at 27 or about 28 or 26 billion dollars as it pertains to market cap. So when you deal with publicly traded companies, if you have a buyer that's willing to put up whatever the market cap is, essentially with a publicly traded company, now it comes down to voters of those shares. But ultimately, given that you're publicly traded, then pretty much you can be bought. It's a lot different than, say, for example, being on the private side where you have a little bit more decision power. All right, so then let's get to this thing called shares, because we talked about that quite a few times. Like, for example, the earnings per share, then market cap. Let's bring it down to something a little bit more granular. So what is a share? It's 1 unit of ownership in a share of the profits, losses, and assets of a company. So which means if you have a share in a company, then you take part in all of that. So whether if the company's profitable or if they're taking losses, and on top of that, if they have assets, then you technically have some type of value. And typically the stock price is indicative of what that value is. So a company creates shares to carve itself into pieces and sells them to investors in exchange for cash. So when you think about it, why do companies come to the publicly traded market? To raise money. Yeah, it's just that simple. All right, so then we talk about like, okay, now we talk about like, for example, a company going public and, raising money. So in order to do that, you kind of need some institutional help. We'll get to them a little bit later. Like we said, that this will come around again. So don't worry. But financial institutions or investment banks that does all of the paperwork and orchestrates a company's initial public offering. So it's pretty much ushering them to become on the publicly traded market to become a public stock. So let's put this in example, for instance. JP Morgan would be, say, for example, the investment bank in Goldman Sachs. And then essentially you would have company X. And then that company says, hey, we want to go public. Well, we need somebody to underwrite so that way they can do the paperwork and orchestrate all the financials for us. And then essentially show us and show us off to all these other investors. So their goal is to make us look more beautiful. And then show us off to all these other potential investors to spur up interest. And then essentially move us onto the publicly traded market where everybody can essentially have a piece of the company. And then with that, those underwriters, since they did all that necessary work, then they get exchanged, say, for example, in share as well as within cash value. I mean, kind of like a fair trade, right? They do all the heavy lifting. You just do your job and, just making sure that your company looks beautiful, and boom. Now, we do see other things out there where, say, for example, we talk about SPACs, but that's a whole nother day because today is just purely about orientation. So we're going to just keep it simple, keep it basic. So then let's talk about this thing called fundamentals, because you hear people talking about you need to know the fundamentals. You need to know the fundamentals. What are the fundamentals? The fundamentals involve looking at any data which is expected to impact the price or perceived value of a stock. So which means any data that's out there can essentially affect the actual value of the stock. So what are some of those things that can affect it? Well, their cash flow statements, their balance sheets, their income statements, and also this thing called 10Qs and a few other things. These are all the things that we look at, and those are typically what we call the financial skeletal system of what makes a company. Without those things, and if those things look bad, that can either tell you that this company has a lot of broken bones, or essentially that the company is very, very healthy. So then let's look at something called technical analysis. Now you see fundamentals and then you hear people talk about the technicals. So technicals are used to predict future price movements, providing traders with the information needed to make a profit. So traders will apply technical analysis tools to charts, those things that you see on a graph in which that you either see a line or candlesticks, but that's a whole nother day. You typically see that on charts in order to identify an entry and exit point for potential trades. So for example, when you see a person looking to do a setup of a trade, they're going to enter in at a certain price, and before they even buy, they already know what their exit strategy is going to be, or they already have their exit points plotted out, so that way it builds towards a strategy. You may hear that in a little bit later also. All right, so now let's look at, there's so many decisions, right? There's so many decisions to choose from. Excuse me for a second. I don't want my dog to hyperventilate. So there's so many decisions out there, like where do you start, right? If you really think about it, there's so many challenges out there when there's so many things to buy. So how do you do this? Zoom out a little bit. So if you're looking at this image, tell us, what do you see? I mean, yeah, you see some pretty cool faces on there, but at the same token, you see different images. So if you zoom out at the industry or sector to better help you spot who the winners are. So you go from a macro level and then you bring it in and zoom in and start looking at a micro level. So for example, if we're looking at the wonderful female doctor there, that would signify that we are looking at potential health companies or pharmaceutical companies. If we're looking at the gentleman there with the red hard hat, then we would probably be looking at industrials. Now, if we're looking at the rack over here that sits behind me, then that's ultimately retail. And if we're looking up at top where it says bank, then clearly that says financials. And if we're looking over there where it says the RTX, that would be tech. And then this thing over here to my left where you see this oil, that would be energy. And then to the very left of that, then you also see some social media companies. That would be considered communication stocks or sectors. Now, within those, you can go a little bit deeper. And I would always say to start off, when you start zooming in, start looking at who the top players are. Who are the folks that actually define what the sector or what the industry is? And then from there, it's off to the races. You can look at competitors. You can look at, say, for example, what they're doing, what's coming out, what's coming down further in the pipeline. But at least you know exactly where to start because it's essentially started out from zooming out. look outside for it, look at it from the whole perspective, and then zoom your way in. It's kind of easier that way. Now, here's an interesting thing. Did you know that 98% of investors lose 100% of their portfolio trading on just speculation over time? Did you know that, Jolene? Okay. Well, Jolene's muted,
I
but
did.
she.
Sorry, I muted. Yeah, I did.
So why do you think that is, people? We'll give you a second to kind of like just sit back and brainstorm and ask each other. So just let's let that question ponder. 98% of investors will lose 100% of their portfolio trading on just speculation over time. Interesting. Oh, and by the way, if you're asking about the image to the left, yes, that is very real.
Burner.
Okay, so now we've done that. We'll come back to that, but let's hone it in a little bit. The game plan is very simple. First step, you study and assess. So how do you do that? You build a trading plan. And what is a trading plan? A trading plan is simply a method for identifying and trading that takes into consideration a number of variables, including time, risk, and your objectives. So what do we look at? Like, for example, what are your goals? What are your motivation for trading? When we look at, say, for example, when we look at measuring those goals, we measure it by what we call the SMART metric. It has to be specific, measurable, attainable, relevant, and time bound. Yeah, kind of like that. Has a nice little jingle to it. Anyway, so then once you've done that, after you've established the trading plan, let's move on to the next thing. You execute and journal. You always want to document your process so that way you can come back and exactly figure out what were you thinking at the time, whether the trade goes well or the trade goes bad. It's always good to go back and look at and see where your mindset was. And another thing as a bonus when you do that, you can also go back and see the lineage from where you started. So if you're here at orientation today, it's going to be super duper dope. Why? Because you'll start today, and then 6 months later, you'll look back to this day at orientation and say, hey, I remember this, 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 and this. And I can't believe it. I went even further doing all these things. So what does some of that execution look like? Well, if you're a little stuck in getting started here, we have this thing called the rolling fours. And don't worry, it's a cornerstone of what we do here at the Come Up series. And it's literally our process for strategically buying 4 times each year or trading with the money that you saved from your income. Now, of course, there's a little bit of an asterisk there because we say 70% saving of income is essentially preferred. You can do a lot of damage when you learn how to save 70% of your income, but we'll come back to that a whole nother day. So then after you've done the studying and assessing and you built your trading plan and you've executed and journaled and you follow along with the rolling four strategy, then the next thing is you get to a point where it's like now you're at the top of the mountain and now you're like in the focus of changing the world and whatever that looks like in your perspective of what the world looks like from your eyes. So now what you've done is you've created something like what we call the new Roaring 20s. Now with that, it's with your discipline, you created generational wealth. Now, generational wealth is not only something in which that you are able to benefit, but the people that will come behind you, so your children, look at them. Now you've impacted their lives. And then think about it, when they have children, you've impacted their lives. And when they have children, you've impacted their lives. And so on and so on and so on and so on. Sooner or later, your name starts to become kind of like synonymous with like the Rockefellers of the world. Imagine that if you could rewrite that type of history, or if not, just be so dope that honestly you shine brighter than it.
Yes.
So then now you create and rebuild the community. So in doing that, now you're influencing other folks so that way they can build alongside with you. And just imagine one person joining up with a bunch of folks. I mean, honestly, I become we and we become the movement.
I'll drink.
All right. But, there are some potential challenges up ahead. So we definitely want to make sure that all of our students are well aware of what some of those things look like and how this board is played on this game. Now, we are what we would call retail investors. And we are essentially like the mom and pop. So for example, if institutions are like, say, for example, the NBA, we would be like the guys who think that we could beat some of the like lower hanging fruit of the NBA, or essentially those are like the guys and gals that play at the LA Fitness and think that they're just running an NBA finals on a Saturday versus ultimately, playing an 82 game schedule like, the institutional investors. It's a little bit of a differentiation there. So how do they differ? Like, how do we differ from them? So one, who has more buying power? Well, institutions do. The institutions are large market actors such as banks, mutual funds, pensions, and insurance companies. Know any institutional investors out there? Could you name some? Everybody thinks about the Oracle of Omaha. He's an institutional investor. When we think about, say, for example, the Jamie Dimons of the world or the Lloyd Blankfields or, so many others, hell, even Jim Cramer at once upon a time was an institutional investor. And still to this day, some will debate whether or not he still is. We know who you are. All right. So then we also talk about who has the better analysis with the data. Now, I want you to remember this. A lot of this information is very much so publicly available. The only differentiation is who knows how to analyze it better. Now, institutions have a slight advantage because they also have the advantage of professional research. So which means that they pay a bunch of folks on their payroll to literally sit back and do the research. And then on top of that, they have traders. And then they also have portfolio managers guiding their decisions. I mean, just think about it. Like you have folks that are in different sectors, and then they all come together and put together this beautiful strategy. And then the investment or the institutional money literally makes a decision and invests or trades. Now, is this board even fair? In most cases, no, it's not. Just like life, it's not fair. But at the same token, as a retail investor, you have something that is very, very precious called time. Whereas you can invest or trade for the most part without having to worry about the pressure to perform. The only person who's applying pressure to you is yourself. You don't have to worry about anybody looking over your shoulder. You don't have to tell anybody, nobody's telling you that you're on the clock or anything like that. It's all up to you. So you're not trying to literally race anybody. You're not trying to beat anybody else's performance for the quarter. This is all about your specific journey, and everybody's journey is specific to their specific needs. Kind of cool, right? And so when we think about it, like I said, most of this information is publicly available. It's just a matter of you sitting down and taking the time. Now, there's also a small little caveat to that, because a lot of times that institutional investor research happens to find its way to the retail investors. Now, the question is, now remember when we asked that 98% of losing 100% of their entire income or their income from their portfolio? Yeah, most of those investors or traders don't look at the institutional research. They don't look at the analyst research. They don't do any of that. They literally are the type of individuals that would watch, say, for example, CNBC or anybody else and ultimately say, well, hey, since so-and-so saying it, I'm going to do it. They trade off of speculation. They trade off of, say, for example, something that they saw on a blog or some type of news article. And that's essentially setting yourself up for a lot of risk. And if that's your speed, by all means. But if that's not your speed, abort the mission and restart. It's time to literally come forth with a new plan. Now, let's just put it into perspective for all of you who are new to this options game and you're still trying to understand it. So we'll make the playing field as equal as we can. On one side, we have the stock investor, and on the other side, we have the options trader. Now, we here at the Come Up, we like a little bit of both, but more so we're a little bit more biased towards options trading because you'll see. All right, so let's just say if you had $10,000 and then you said that you wanted to trade Apple, we're all going to trade it together. So then the price target for Apple in 2 years is at $150 a share. All right, so at that point, the playing field is still level, it's still equal for everybody. So then let's come back, let's bring it down a little bit. So let's say the stock investor has Apple price per share at $100. So the current value of the share is $100. And they say they're going to pay the full $10,000 and divide that. So pretty much they're going to put their $10,000 towards an investment. So you take the $10,000, you divide that by the $100 a share, AKA you now have successfully 100 shares. Congratulations. All right, now let's look at the options trader. The options trader is going to say, okay, my price target for Apple is still at 150 in 2 years. So I'm going to do an options contract and I'm going to say, I'm going to look at these contracts. So these contracts equals, so one contract equals $1 in this specific scenario. Now remember, an option is you have the options to buy or sell to someone else at a specific price. Now, when you think about it, one is control and the other one's ultimately ownership. But again, that's for a whole nother day. This is just orientation. So we're just giving you taste of everything. So let's say that the value of the contract equals $1 today. And there's always 100 shares in every contract when you're doing an options trade. So 100 shares per one contract. So then if we say 100 contracts times 100 shares equals 10,000. Because you see how we did that there? You take one contract and the dollar of that contract times, say for example, 1 times 100 shares in every contract equals 100 times another 100 equals 10,000. All right, so now they're equal. Both sides have paid $10,000. Now, of course, you can see how this goes. So we're just going to add in some spice in there for you. So then let's say that the value of the stock for Apple goes well above the 150 marker in 2 years. Let's say that they're trading at 165 for fundamental and technical reasons, as well as quantitative and qualitative, but we'll get to that a whole nother day. So let's say that they gain $65 a share in profit. So if you put that into perspective, if you exclude the 10,000 that was invested, the 65 times the 100 shares that you own puts you at a whopping $6,500 in profit. Cool, right? Well, let's look at the other side. So on the other side, let's say that the stock only increased by $25 per share. Now, of course, this is all hypothetical, so we're just doing this just for information purposes. So let's say it goes up by $25 per share. So let's just say with that, the actual contract went from $1 and it appreciated up to, let's say, $4 now. So now you take the $4 that's the contract price, times 100 shares, that's in every contract, times the 100 contracts that you already own, and thus we're at 40,000. Now, if you subtracted the 10,000 that you've invested, that puts you at a $30,000 profit. And that right there, that's the new math. Yeah. Didn't really have anything else to say that, but you know, it's the new math. All right. So what are some rules here to avoiding some of these potholes? Well, don't give seasonal trades lifetime expectations. So if you think that, say, for example, those option trades are very, very attractive, well, here's some rules here. If you're playing a position, and this is the reason why we have to we like to focus our new and incoming students on long-term positions, because we know that you do better in the long term. And on top of that, you subsidize a lot of risk off of the table. So that way you don't have to worry about, for those who played the weeklies or the monthlies where you're constantly sweating bullets on, the upticks and swings and downs. So when we say don't give seasonal trades lifetime expectations, if you're in a trade for 6 months, you got to know exactly what the catalyst is based upon fundamental analysis, technical analysis, as well as, for example, also taking into consideration some quantitative and qualitative, which we'll touch upon later. When we put that into perspective, now it's like you can't put a 5-year strategy like most analysts do. You can't put that 5-year or 3-year strategy into the stock or into the option trade that you're trading that only lasts for 6 months. You have to know specifically what's going to take place within these 6 months that's going to really drive the company to ultimately build forth value and ultimately to spur us, the investors in the publicly traded market, to be able to want to buy. Yeah, it's kind of like a domino effect. So what we do is, so that way you can kind of like get over this whole situation here of potential pitfalls and headwinds, we just say stick to your plan. Traders or stock investors, whichever one you want to be, and you could be anything that you want to be. Whatever you do, just stick to your plan. That's all that we ask here. Here at the Come Up series and our School of Investing, we have a 0% dropout rate. So we intend on keeping it that way. It's our No Cousin Left Behind initiative. Right, Jolene?
That's right.
So some of the things in which that you see on these screens over here, these are typically the two things that ultimately lead investors to their downfall. One being greed, and then another one being FOMO. And what do we say about FOMO? It is not a strategy. And for those of you that wanted to know what FOMO is pretty much fear of missing out. And greed is, think about it like this as a wonderful quote. Bulls make money, bears make money, pigs get slaughtered.
Mm, mm, mm. You know, we don't eat pork around these parts.
So what's the goal? What's the motivation behind it? Well, it's quite simple. We are our ancestors' wildest dreams. Somebody very smart said that. I mean, I'd really like to know like who really said that.
Who did say that?
Yeah, but I mean, we could just say somebody very smart said that, clearly. And we believe that wholeheartedly here. And if you believe that, you have to ask yourself, what is it that you're investing in? What is it that you're doing that would make them proud, especially if they toiled the journey that came before you? I mean, just think about it. For all those folks who took part in the civil rights movement, for all those folks who took part in the slave trade in the African diaspora, then think about it in the process of, well, what did their suffering ultimately lead for me to ultimately do in their honor? Or if you need something that's a little bit more granular, just think about it in the sense of, again, the folks around you. So if you have children, what do you want their life to look like? If you have other family members, what do you want their lives to look like? If you have a community in which that you care a lot about, what do you want that community to look like? In order for that community to build and ultimately to grow, it's going to take individuals like yourself and whom which that are willing to put in the work and make the necessary sacrifice to see this through, and boom. Now, of course, we're not going to leave you empty-handed here at the Come Up series. I mean, no. Our School of Investing, we like to give you the greatest rubric and the greatest tools in which that you can go out there and be successful. So here's what we did. We gave you a wonderful set of semester and course materials, and there are 31 of them in which that you can pick from. And like we say, there are levels to this. And so we say this, and to conclude this orientation, which we hope that you enjoyed and we hope that you found very, very informational. We say the dream is free, but the hustle is sold separately. So we're going to give you the course materials, and on top of that, many other goodies that are going to come out. And there's going to be tons of awesome knowledge that's going to take place from here on out. The only thing that we ask for you to do is stick to the script, execute, and literally just put the work in. And if you can, bring other folks to the forefront. Again, tuition here is 100% free, and we like it that way. So thank you all. Thank you for enjoying this orientation. And without further ado, I'll pass it back over to Mark and Joel and JC in the place to be.
Yay!
Wow.
That was an excellent orientation, Dean Mark. Okay, so first of all, let's back it up a little bit.
Okay.
I hope that you all by now are like seeing the math, like the difference between what it means to own versus what it means to control when it comes to companies, aka owning stocks and shares, or excuse me, owning stock, shares of stock, and options contracts. The math is just different. I mean, it just is. I mean, it's all the numbers, like it just is. You all have seen the burner account. There will be a burner account reveal at the end, right? At the end of the year. Yeah. So, I know y'all want to see the burner account where it is now. So the end of the year, we'll have that reveal. Another thing I want you all to really take into consideration is we purposely did this, sort of like reset with this orientation. And it's because we listen. We're always listening. And through that listening, it was more than apparent that there were new cousins coming in. We can always tell by the types of questions that land in our DMs. Like when we start getting those questions that are, you know, things that you could probably just Google, we know that a new, oops, I just dropped something, a new batch of cousins just came in. So we just wanted to bring it back. And so for you older cousins or the OG cousins that have been here for a minute, you can look at this as a way to sharpen your own tools and say like, okay, did I know all that stuff? And not only do I know it, can I apply it? And then not only do I know it and apply it, can I share, can I teach this to someone else? So I want you all to reflect on that. Also, something that we started thanks to the OG cousins. I gotta shout out some cousins here.
Do it.
So thanks to the organization of TiVo, Cousin TiVo, you all are getting a new initiative called 31 Days of the Come Up. And that is where an OG cousin will break down one of the 31 countries, one of the 31 stocks. Yo, I'm trying to travel. Okay.
I know, right? Like this COVID is like literally messing up our flow right now.
Right. We could be anywhere right now. But yeah, so every day in December, there will be like a snapshot of one of the picks on our list. So today it was Microsoft. You can find that on Facebook at the Come Up Cousins group. So it's just called Come Up Cousins. There is no the. It's just Come Up Cousins. Look for that. You got to apply. And then once you are accepted, then you'll get access to even more stuff. And this video too will go into, there's all these different modules to help you out. So we're really starting to like streamline this so that you all can literally get in where you fit in. And shout out to Kazo Rashid, who also helped with the 31 days of the Come Up. That was an initiative conceived by the cousin. So thank you for that. Also, Zay and Ajane will be leading a session on December 13th, I believe. If that's wrong, Vanessa, correct me if that's wrong, called Bridging the Gap. And that will be a live Q&A session with the presentation on prepping for the next quad witch, basically getting ready to invest. So for those of you who are brand new, that may be a time that you want to get on. And those are our OG cousins, Zay and Ajane, who have been around and basically know what they're doing. Then another thing that we're doing, and this is all included in your tuition. All of this is included in your full ride scholarship, okay? We also have some clinics popping up. So the clinics are going to be offered twice a month starting in January, actually the top of the year. They'll be offered twice a month. And during those clinics, if you don't know, like a clinic is just a concentrated session on one topic. So that's it. There's not going to be multiple topics. It's one bite-sized topic. So for instance, it might be a whole clinic on strike price formulas, or it might be a whole clinic on puts. So we're going to start doing that twice a month. And that is for any of the cousins. You can get in where you fit in. If you're an OG cousin, that's fine too. But the two that are kicking off that initiative would be cousin Vanessa, who is one of our moderators here, V, and I believe AJ is helping them as well.
AJ, that's an all-star set of cast right there.
Yes. So also this is a call to other cousins. If you want to contribute in some way, shape, or form, reach out to some of those cousins that I named. So reach out to Vanessa, reach out to TiVo or AJ, or I'm missing someone, or V. Reach out to those cousins so they can help to plug you into where you need to be. Vanessa will be posting a list or excuse me, she'll be posting a survey to see where your gaps are. So for the Bridging the Gap session that's coming up, if there's an area where you're like, man, I tried on my own, something's still not clicking. That's the kind of topic that needs to be known so that they can plan ahead, so you can get your questions answered and get these topics together. So you all, this is legit a village effort. Okay, like everyone, it's like all hands on deck. And we are so serious when we say no cousin left behind. Because there's no reason. There's no reason for you to be left behind. Like we are all here to move as a unit. This is a movement. And with that, let's just take a breath. Can we just take a collective sip of water? Like, it's been a long road, it has been a lot
going on this year.
A lot.
And we're not done.
We're not done. That's the wild.
We're not done. Like, there's so much more that we're going to be announcing coming out like fairly soon.
Yeah.
Well, if we're the come up cousins, I mean, there's got to be come up children.
There has to be.
Yeah. It's like we're going for the jugular, right?
All hands on deck. Big hands, little hands, medium-sized hands. Seriously. It's going down, y'all. I'm going to let you know this right now. You know how we have all talked about, like, man, I wish I would have known this sooner. The come up children will never have to say that. Ever. This will be how they roll. They won't know any different. They'll just know, like, oh yeah, I invest. I trade options. Oh yeah, I build generational wealth. I buy stocks. That's going to be our children. Y'all don't hear me. Y'all don't.
Well, I mean, maybe we can help them, like, just tune it in just a little bit. Just a little bit.
Mm-hmm.
We could be coming to a school near you.
We could be. Take a sip. Can you all imagine? This is a multi-generational movement. I want you to just imagine this for a moment. Young children, teenagers, parents, aunts, uncles, grandparents, great-grandparents, sitting down and talking about stocks, investing, going over charts, over dinner. Think about the level of conversation that will be had at these dinner tables. Think about the level of conversation that will be had at reunions, at family functions, where if someone in the family needs something, the family has it. Imagine growing up without any lack. No lack. Like I say, all chips, no dip. Imagine that. Imagine your contribution at this time right now. If all that is required of you is to learn, that is all that is required of you right now in this moment, is just to learn. And on the other side of that learning is not only your freedom, but the freedom of generations after you. Y'all better stop playing. This is free right now. We actually have the luxury of coming on this Zoom twice a week to freely give out of the kindness of our hearts, because we believe in each and every one of the cousins. That's why we say no cousin left behind. That's why we say all hands on deck. And that is why we say FOMO is not a strategy, because this is not about FOMO. You're not going to miss out. There is no fear. I cannot stress that enough. There will constantly be cousins going back for those that just discovered us. It will be a wave. a sustainable way where the babies will be teaching the next generation, I guarantee that there will be 6-year-olds, 10-year-olds.
You got 6-year-old beefing. You got 6-year-old beefing with me over just taking a stock off of the list. So I mean,
shout out to Eliana. Eliana is 6 years old.
6 years old.
She is my attorney's daughter, her middle child. All my friends' children invest. This little girl who is 6 years old, her mom sent me a video of her at the computer. Her mom's like, "What are you doing?" And the little girl, Eliana, 6 years old, starts talking about, "Oh, I'm looking for stocks to invest in."
She said Google Class A.
Yeah, she said Google Class A. She knows about the different classes, y'all. So if Eliana is watching the come up and she's learning, and she watches with her mom and her brother and her sister and her dad, like all watch together. This is a family thing, multi-generational. So it's okay if you have family members who just don't get it yet. It is okay. We have to keep moving forward, knowing that we will reach back. We will give back, we will reach back, and we will take back what was stolen from our ancestors. I was thinking about this the other day, y'all. I was looking at, I was just thinking about Harriet Tubman. I was just thinking about just in general, our ancestors physically labored, and did not get compensated. No compensation. Meanwhile, here I am, their wildest dream, multiple centuries later, where I don't have to physically labor, and yet I get compensated. There's income coming in, and there's no physical labor. Y'all know I'm the first lady of leisure, okay? No labor. So we went from you must give your physical labor, toil by the sweat of your brow for scraps for nothing, to now we're in the position to actually use our brain in a comfortable chair on these expensive electronics and generate generational wealth. That's how serious this is. So I hope that you understand the gravity and the urgency of this situation, but it is time to close these wealth gaps. And we're not waiting on nobody's policy from Congress. We're not waiting for a law to be passed. We are doing this now. We did it yesterday. We're doing it now. We're going to continue to do it. That's how serious this is. And that's all I'm going to say right now before I really just go off.
I only have a little bit of water left. So I wanted to say something, because a lot of folks don't have the opportunity to use the come up. So I wanted to do something special for folks tonight. And Jolene's given her benediction, and I think it's time for me to give mine.
Yes.
Except, okay. For those of you that don't have the opportunity to sit on the Clubhouse, and some folks think that I actually read when I'm doing the benediction. I'm not. It's like I'm literally, a lot of times I just speak off of the top of the dome. So here we go. If anything, when we think about late registration, we were very much so very focused and very choosy with our words. Now, of course, a lot of you are going to revert to a Kanye West song, in which that you could possibly find some gems there within that album, for sure. Anyway, but the reason why we also said late registration is because of the fact that we've been a little bit late to the party. But essentially, the party is only just going into the second inning. And there's quite a few more innings of this. And essentially, it's like, it still doesn't mean that just because you're late, doesn't mean that you still can't have fun and you can't take advantage and literally enjoy the party. So one of the things that I said to folks about, this whole party thing is that journey back in time, if we think about it 5 months ago, many of you were sitting outside the window saying, hey, if only I can do this, if only this information was much more attainable, if only this information was available for me to be able to understand and dissect, and then I can go out there and make something for myself, or my family, or to ultimately the next generations that follow. And then came along the Come Up series. And we're here to let you know that essentially each and every single one of you, even if you're new today, you're no longer the person that's standing outside the window watching everybody else enjoy the party. You're now a part of the party. Now, what you do inside this party, who you connect with inside this party, that's going to be completely up to you. And when we mean by the people that you connect with, we're talking about the companies, not the actual people. We're talking about the companies. Now, here's the thing to really be understandful and mindful of. If we were so loyal to any of these companies, then there wouldn't be 31 picks. So which means none of these companies are going to be loyal to you. So we strongly suggest that none of you be loyal to them. You use them for essentially the one thing in which that they can give you, which is value towards your portfolio and building that generational wealth, so that way you can move on to the next one and the next one and the next one and the next one. Think about it kind of like if you're at a networking event and essentially you're just collecting business cards. You're not going to collect everybody's business cards because not everybody's business is essentially privy to you or ultimately within your wheelhouse or at your speed. So what you will do is you'll focus on businesses that in which that you can actually work together with or collaborate with and essentially move forward. So again, you're no longer the person that's sitting outside the window saying, okay, hey, I wonder if I'll ever be like them, or I don't want to be like them, or whatever it is. That's your choice. But all we're telling you today is you're a part of the party. So welcome. Grab your punch, grab your books, whatever it is, drink up, and ultimately start networking with some of those companies. Get to know who they are, understand exactly what their strengths are, and see if there's potential for you to collaborate as it pertains to a monetary value. And once you've collaborated, then you move on. So the reason why we say that, and the reason why you hear me talk about the knowledge of the party, is because of the fact that I really need that to sink into every single one of you. You're here at the party. The party is here. So though that the late registration has already taken place, you're still benefiting from the party. And what I mean by late, like think about it. There have been other cultures and other generations that have had, say, for example, a further head start. But notice something. You're in the same game with the rest of them. And some of them aren't doing so well. And here's another cold stat for folks to focus on. Remember that stat that we talked about where it said 98% of investors or traders lose 100% of their portfolio income or value? Well, think about it. If we weren't there at the party, then I wonder who were the 98% that were losing. Just want to let that sink in for a second. I mean, because if we represent the minority and, many of you are just coming into the game or into the party, then you see a lot of losers that are exiting stage right. And maybe they just didn't network with the right people, AKA the right companies, AKA the right, what. So I'm saying this for each and every single one of you. Take your time. You don't need to rush. You don't need to essentially think about it in the sense that this is like a 30-second speed date. It doesn't work that way. And the folks in whom which that do the 30-second speed date, you don't really learn anything from anybody. You don't really learn very much about the other person or the other company within 30 seconds. So take your time, do the research, stick to the script. There's a beautiful thing called a rolling forest in which that is definitely at your disposal. So we kind of taught these things early on. You probably heard them from a course. And now we've become a little bit more organized in this movement, which we like. We're no longer at the mixtape phase. So today we're actually making that announcement that we're moving from mixtape phase and ultimately getting a little bit more organized, a little bit more focused, and a little bit more strategic when it comes to our direction. What we've always said from day one is we're here to unbalance an equation that has been very unfair to a culture of folks in whom which that have been highly underrepresented. And it's time that that changes. So if you're with us, raise a glass, raise a cup, because we welcome you. And these are going to be the greatest years of your life. So drink up, stay hydrated, keep studying, keep researching. And here we go. Because there's nothing like, there's nothing like a journey to the future. And what does that future look like? Until next time, I'm Mark Monroe.
I'm Jolene GC in the place to be.
And this has been your Come Up on Trade